Analysis on all of this. Stan Shamu joins us from IG in Melbourne. Now, Stan, good to see you there. Yeah, certainly a lot of worries for markets overnight. In particular, what do you think was holding markets back? Was it the Fed? Was it China? Was it a bit of both?
Yeah, no, absolutely. It seems like sentiment continues to be the main driver of markets at the moment. Of course, the US dollar got off to a pretty good start, with the dollar index drifting to a three-week high, approaching that 83 level. But as soon as we started to hear some of these Fed comments hit the wires, we did see the US dollar start to pare back on these gains. Of course, we had Fisher on the wires suggesting that perhaps the reaction to the recent Fed comments was a bit overly done. At the same time, we had Koshila and Dudley as well, Fed members, who came out with the usual dovish tone, and that really did help markets recover from those losses. And of course, the dollar did lose a little bit of ground, but this wasn't enough to really lift the risk space, as China concerns continue to dog, particularly the resource-related and of course other risk names, and this really did hold markets back from a full recovery from those Fed comments. But of course, it is a situation where China received a couple of downgrades yesterday from some of the major banks. I think UBS and Goldman Sachs both came out with growth downgrades for China. We've got most analysts now firmly in the region between 7 to 7.5% growth for China over the next couple of years, and of course those interbank rates haven't really done enough to calm investors' concerns, so that will continue to be an issue as well for all those investors out there who are looking to be long risk. Of course, going ahead, I think China will move to the forefront of the market concerns. Of course, with the Fed behind us now, I think the market will definitely look towards China, and they would want to hear something a little bit more official from the Feds, suggesting that they will take definitive measures to calm markets over there. Of course, everyone's fearing a liquidity crunch in China, and should this come to fruition, of course, then this could cause significant turmoil in the market space. But of course, with the US dollar losing a little bit of its shine, it helped support some of the risk currencies. They were relatively sidelined, like the Aussie dollar, for example, just holding around that 92.5 level. The dollar yen pulled back below that 98 level, with the US dollar losing ground. It's still around 97.50, so it's not too bad at all, but of course it just highlights the level of confusion amongst investors at the moment.
What are your opening calls then for the local market?
We're actually calling the market down 0.7% to 4,636, so that's now negative for the calendar year. Of course, we closed last year at 46.49, so that's now down about 15 points or so. So it's not looking too good for the local equities, particularly for the materials space. We had iron ore prices losing about 1.7%. So BHP's ADR is also pointing down about 1.4% or so. So that should be across the iron ore space. Of course, we saw Fortescue trade below $3 yesterday, so that would be one of the stocks to watch. Perhaps we might see some investors look to pile back into Fortescue. It is now approaching its lowest level since September last year, when iron ore prices were in the $87 a ton mark. So that's now getting towards that very attractive level where we might see some bargain hunters look to accumulate Fortescue. Apart from the iron ore names, we've got the gold stocks remaining in the doghouse, really. Of course, they've been struggling quite a lot over the past few weeks. Gold prices continue to come off, and there are reports now suggesting Newcrest might even be looking to cut 150 jobs from its Lihir mine. So it really does look like they're struggling. There's also been talk of potential capital raisings for some of these gold miners should the gold price remain quite as subdued as it is at the moment. We also have Perseus Mining, which dropped about 13% in Toronto just after announcing a potential rise in costs and a production downgrade. So it doesn't look too good at all for the gold space. AMP, of course, yesterday had a profit warning. They'll be back in focus today. That some of these analysts are starting to roll in the downgrades. We've got Deutsche Bank downgrading them to a hold from a buy with a $4.80 target. So it does look like it will be an interesting session on the downside today.
All right, Stan, as always, thank you so much for that.
Cheers, Roddy.
We are bracing ourselves. Yes, Stan mentioned their IG's call, 0.7% fall on the ASX 200 at the open to 4,636 points. SPY futures off about 0.6%, or about 30 points at this stage. Let's just remind ourselves, of course, what happened in yesterday's